The UK could be the fastest growing G7 economy this year, but the bigger picture is that growth is unlikely to last that long, and the signs that we're heading for a hard Brexit. Brian Davidson, Fathom Consulting. This week's highlight seems to be the US GDP release. It's been noted by the Wall Street Journal that the creation of startup companies in the US is at historically low rates. Figures are expected to be a slight improvement on last quarter. So Brian, could this data alter the Federal Reserve's December interest rate forecast?
Well, I think absolutely the Federal Reserve will be looking closely at Friday's GDP figures. So we're actually forecasting a 2.9% annualized increase, which is higher than what the market thinks. But actually, the bigger picture is really whether the GDP data disappoints or not. On Friday, we think the U.S. labor market's tightening quite significantly. Wages are rising, inflation's rising. So we think the Fed will raise interest rates in December. We also think they'll raise rates twice next year, independently of Friday's GDP figure. That being said, if it's a terrible number, it could change the picture, but we're quite optimistic that the Fed will go in December. If I may as well, on small business creation, I think that's really a good point. Something that Janet Yellen brought up recently in a speech. She cited the weak productivity growth in the U.S. One of the factors for that could be the lack of small business creation in the United States. So that clearly small businesses are companies that tend to generate good ideas, that develop new products, and that leads to higher productivity. So until productivity really starts to pick up in the U.S., we might see sluggish growth in the near future or the medium term. But we also think that really low interest rates could be part of the problem. We've had interest rates at exceptionally low levels for a long time now. And with such low rates, maybe large, unproductive firms that might otherwise have failed, they could still be in business. So that is also part of the problem, we believe, low interest rates.
US stocks closed in a mixed direction on Friday, despite a dollar rally. Could we expect this dollar rally to continue throughout the week, despite the US GDP data being such an influence on the dollar?
Well, the most important data release this week is on Friday, which, as you say, is the US GDP. But there is a durable goods orders report for September, which is out on Thursday. There's consumer confidence out tomorrow. So a really good number in either of those reports could see the dollar rally continue. But again, getting back to interest rates, our view that the Fed will raise rates this year and raise rates twice next year, that will underpin continued strength in the dollar, particularly with a divergence in monetary policy between the US and other countries. Last week, the ECB hinted that, well, there was no hint of any tapering there. So the divergence in monetary policy, yes, we think will keep the dollar strong for the foreseeable future.
GDP figures for the UK are also one to watch this week, as a key indicator on the health of the UK economy amid a weak sterling. The IMF has predicted that Britain will be the fastest growing G7 industrial economy in 2016. Brian, despite Brexit concerns, is Britain still on target to meet these IMF's predictions?
Well, I believe the IMF forecast looks about right. I think it's, if I'm not mistaken, it's 1.8% for annual growth this year. So we think UK GDP in the third quarter will come in at 0.4%, which is consistent with our own forecast and the IMF's forecast that, yes, the UK could be the fastest growing G7 economy this year. But really the bigger picture is that we think this growth is unlikely to last very long. The signs are that we're heading for a hard Brexit. Investors seem to be taking this on board. Sterling's depreciated quite a lot recently. UK inflation's gone up, which is going to squeeze real wages. And businesses are, by all accounts, putting investment decisions on hold. So all of these things are likely to slow GDP growth next year. So we think actually UK GDP growth could only be 0.5% for the whole of 2017. So even if we get a decent figure this week, that's largely an event that data that has passed. So looking ahead, we're not too optimistic, really.
Well, Brian, thank you for your insights. This week is just getting started, so for all the latest news, keep clicking back.